Dogs or cats for you?
Cats.
Do you have a cat?
Yes.
What's the cat's name?
It is Luxie.
Okay, Luxie's cute. You've passed. You've done quite well. Thank you for coming. Welcome back to the Future's Edge podcast. I'm Jim Murio. As always, we have Bob Iacino, who's the brains behind the operation and co-host and executive producer. And today's a special show. We have Tracy Shuchart, Chief Energy and Materials Strategist for let's do that whole thing over again. We have Tracy Shuchart. By the way, they won't edit even that.
They won't edit that.
We
it's going to stay
don't
exactly
care,
like that.
right? Okay.
Hightower. I'm on my own now.
I know. Yeah, I know. It's right in front of me, and I knew it anyway. We have Tracy Shuchart, Chief Energy and Materials Strategist for Hightower Resource Advisors. Thank you for coming, Tracy.
Thank you, guys. It's been a
Clearly, from those
long time
windows
waiting.
behind you, you're sitting in a high tower, which is nice.
I have a fake background.
That's
I
what
thought you had a fake background. Okay, good, because it moved. I was like, wow, that's so cool. But then it moved, like you moved it, it didn't follow. So I thought it was fake. But anyway, it's good. So anyway, at the beginning of the show, we play the lightning round just to establish credibility, break the ice. You will be asked 5 random questions that I don't even know what they're going to be. You have 5 seconds to answer, and you will be judged harshly on any bad answers. There's no, yeah, okay. So let's go. First of all, favorite movie.
Favorite movie? Poltergeist.
You've never thought about this before, ever?
Wow. Poltergeist.
Poltergeist, interesting. Okay, no one said that before. Favorite actor or actress?
I don't. These are hard. I don't really watch that.
It's not. You thought it was going to be okay. Fine, we'll switch that question. You get that's your okay. You've lived in several places as I've followed you on Twitter. I'm not going to ask you what's your favorite place. What I'm going to ask is what month in what place is the best combination of any place you've ever lived?
I would say Chicago for sure. In
What month?
2008 and August.
August. Okay, August is a little hot for me. I thought you were going to go with September. Bobby, didn't you think September is what it was?
Yeah, I definitely thought it was going to be September, but I knew it was going to be old Chicago, not current Chicago.
Current Chicago is a little different. I still
A lot
like it,
different.
but now it's an acquired taste, and you might have to dodge a bullet here and there. Dogs or cats for you?
Cats.
Do you have a cat?
Yes.
What's the cat's name?
It is Luxie.
Okay, Luxie's cute. You've passed. You've done quite well. Thank you for coming. Do you have any questions for us before we start? As you can tell, it might be one of the least serious podcasts you've ever been on, but we do get to important things. And having you on, who's someone I always think it's funny, by the way, that my 3 go-tos in crude oil besides Bob are you, Halima, and Bryn. I think it's pretty cool as the dad of daughters that it's 3 women. And I'm not trying to be some bullshit feminist, whatever, because I know we don't give a shit about gender, but I think it's neat.
You just called me a woman, by the way.
No, you're just effeminate, but whatever. I like you either way. You have to be overcompensating for something with the tattoos and the Trans Ams. Okay, so here, I don't want this to devolve into like to bashing the current administration on energy policy. And if you guys know me, that's a complete lie. I absolutely want it to devolve in bashing the current administration's energy policy. But let's start with just last week. We've had him just threaten to put out of commission every coal plant and replace them with a team of elves who are going to shuffle their socks on shag carpet and try to get enough static electricity to power people's houses. And then at a environmentalist speech, he said, no new drilling. Does he know what he's doing with these things, Tracy?
Absolutely not. I think this is the most energy illiterate administration possible. And it's not just him, it's Granholm too, who's just head of the EIA. It's the entire administration. And the thing is that what the US is trying to do is mimic what Europe has been doing for the last 10 years, and that's going down this energy transition policy without having a backup, right? And we see exactly the disaster that it's having. And forget the Ukraine war at this point. Just pretend that doesn't exist. Their problem started long before that. Certainly that exacerbated the situation. But if we look back to as early as September of 2021, we started seeing smelters having to shut down because natural gas prices were too high. In fact, by the end of 2021, which was again before the Ukraine invasion, almost 50% of their smelting capacity was offline because it was too expensive. And people kind of forget this because all the whole focus has been on the Ukraine invasion, which again, yes, it exacerbated the problem, but the problem existed well before that.
What's the answer? Is the answer nuclear, like everyone else has been saying?
I mean, I think nuclear is great. You're going to have a hard-pressed problem trying to convince the West to go nuclear. Yes, they'll, we have seen Germany, for example, say that we're going to not shut down, the last 3 nuclear plants until March. But I would expect them to keep pushing that out because as soon as we get to 2023, we're going to have a huge nat gas problem. And that's a whole different issue. But, if we look at nuclear in particular, you have to, the Fukushima, Chernobyl, that like spooked the West off nuclear. And yet, yes, I think that's great. But we also have to think about all of our facilities here are aging. They're all 20 to 50 years old. And so if you want to bring on new projects, whether it's in Europe or in the United States, that's going to take 10 years at least to get these projects on board. So yes, I think that's a great solution, but it's not a solution for right this second.
So there's been a lot of press about the diesel shortage. And, some make it 25 days of diesel supply, which is down from normally 40 days. It doesn't, to me, I've read several different things. It seems bad, but not the end of the world. Can you walk us through that problem and tell me if you agree?
So, I mean, if we look at the diesel shortage, and it's not only a problem, it's majorly a problem in the US Northeast, right? And that is a result of the fact that we have only the Colonial Pipeline going up there, right? And it stops at New Jersey. That leaves the rest of everybody else kind of screwed. We also had PES refinery shut down, which was 335,000 barrels a day in Pennsylvania a couple of years ago. And so we have no refining capacity up there, and we have no pipelines up there. And we have environmentalists not wanting any more pipelines or anything like that. We also have a problem with the Jones Act, which the Jones Act specifies that you can only have US vessels coming to, transporting oil, or transporting nat gas or oil products in general to the US, which is what we need to do because Colonial only has a certain amount of capacity. So generally we take ships from the Gulf, we bring them up to the United States. And initially when that's a 1920s law. And it
what was it for? Why did it come about?
National oil security at the time. And that was right around World War I, right? And so it was a national oil security time. But at that time, we had 2,500 vessels in the US that were flagged in the US that could bring, or products, whatever, up to the East Coast. We have 100 vessels now. So
oh geez,
that's a problem. That's a huge problem. And
so
so
do you think
what they could, sorry, go ahead.
No, I want you go.
What they could do is they don't have to, if people are focused on the national security issue, that's fine. But what they could do is just have a waiver, right, for a certain amount of months until we get this situation under control. But
so one more question from me, and then I'll move it over to Bob. When you think, like you say, a waiver, and again, Jones Act is point to point, U.S. point to U.S. point. It has to be U.S. flagship. Is that correct?
Correct.
Okay. So, and you said they could have a waiver. It seems like it's so simple. It seems like everybody would vote for that. It almost, to me, we always argue in the show about incompetence versus nefarious. It almost, or just not giving a shit. Which one is it?
Well, I mean, I think it's a combination of both, because it's a very simple solution. Yeah, it's not a long-term solution, but it is an immediate solution. And so immediate's not so bad. The problem is this administration is still not talking about this. And it's not like they haven't done this in the past. They did this for Puerto Rico after the hurricane. They did this, it's not like they haven't issued waivers in the past before. They have. And so the fact that this administration is still not talking about this or still not bringing this up, that's a problem.
Bobby?
Tracy, the Strategic Petroleum Reserve. So,
My favorite subject.
I forgot about
I could almost just stop right there. I literally don't even have to.
Drink the Strategic Petroleum Reserve.
Jimmy always complains that my questions are more like lectures that end with a fake question.
I'll take two naps during his question.
And I'm just going to ask your opinion of these sales based on the fact that the SPR is created for emergencies when there are critical undersupply of crude oil, whether deliberate or because of natural disaster. And some people argue that basically is it's always been, it's in the actual documentation of the SPR Act, that it is basically to keep prices lower. And that's what this administration is doing by releasing oil from the SPR. I don't agree with that, but what's your take on it?
Well, I think I've been pretty vocal about this.
Yeah, you have.
That's
why I asked.
Be again.
But again, it's for emergency purposes. And, we've drained it from over 750 million barrels to, I think the last count was 392 million barrels. That's almost half, right? It's the lowest since 1984. And so the purpose of this is, if say we have a hurricane like Katrina, when Katrina happened, we had to dig out of the SPR to go help supply that area. And so with everything geopolitically that is going on right now, and with all the conflicts that are going on right now, with the tenuous relationship with, say, Saudi Arabia right now, I mean, we need to be careful with our strategic oil reserves. And it's not only that, it's just that the US produces mostly light sweet crude oil, right? And that's really, you can only produce gasoline from that barrel. That's what comes out of it. So we need heavier crude in order to produce the distillates that we need, like diesel, jet fuel, kerosene, etc. Right? And we've been draining the SPR of mostly heavy crude oil, the kind we don't produce. And this is where it becomes a significant problem that people—
See, a lot of people don't know that. That's brilliant.
Right. And so this is where it becomes a significant problem, because, we mostly get our heavier crude oil from Canada, which we all know the problems there. Keystone was canceled, et cetera, et cetera. We get some from Mexico, but their production is not looking that great. We used to get some from Russia, but it was like thick sludgy oil, but at least it was something that we could mix. Now, we have a Russian oil embargo, that's fine. So that's 600,000 barrels per day that's off the market right now. And so we have a serious problem with heavier crude oil and trying to get that. And that's what we're draining from the SPR. And so this is a problem that people don't realize.
So tell me this. Do you, like, when we're talking now, let's break it into the price of crude market. So it sounds to me like you're saying $100 crude, right? What time frame? What are you thinking?
I think eventually, I think we could see that again. Of course, we did see that earlier in the year with a war premium, in February when there was an invasion. We did see that did come off some. But I think as soon as, and we are already starting to see these SPR releases dwindle, right? we went from like 8 million barrels a week to 3.6 million, and that's going to taper off unless they issue a whole nother slew of of releases. And so I think that, and then we also have to look at the fact that December 5th, we have the EU oil and product embargo, and that's actually going to exacerbate the diesel problem even more because EU actually.
Can you explain what the EU embargo is on December 5th? Like, I don't know.
Oh, so on December 5th, there's an EU embargo, not on natural gas, because they still do get some natural gas. But it is on oil and oil products. And
From Russia.
From Russia. And so what that entails is that mostly the products that they buy is diesel from Russia. And so that's going to put a crunch on the diesel problem even more, because diesel problem mostly exists in the West. It's mostly Europe and the United States right now. And so we have to look to see how this embargo really starts affecting the global market. I mean,
Okay.
I don't think it's going to totally take barrels off the market, right? Russia's going to find other markets, India, China, even Japan, which is a member of the G7, still is buying from Russia and said they still will continue to buy from Russia. And so it's not this decision is not a global decision. Everybody has to kind of remember that is when we're talking about global oil flows, is that not everybody has an embargo.
Okay, so here's no barrels of Russian crude oil have been off the market yet, right? Almost none.
Almost none. And I kind of said that at the very beginning when this happened, and you had a lot of other firms coming out and saying 3 to 4 million barrels are going to be taken off the market immediately, et cetera, et cetera, et cetera. And I said, there's no way, because there's other buyers. If you look to India or whatever, India, no, oil prices are so high right now. Any emerging market right now wants to buy at a discount. And when that first happened, I mean, Russian oil was at a $30 discount to Brent. Who wouldn't buy that, right? Because you're suffering. And you also have
for the SPR.
And you also have the dollar, exploding. That means your currency is worth, and you're having to buy oil in dollars. And so it was especially tough on emerging markets when all that happened. So of course, they're going to buy oil, because India even said as late as COP27, we're still going to buy from Russia because we're more concerned about our energy security than what the United States is.
It's another one of those things where it just sounds good. We'll embargo Russian oil. Yeah, but a lot of people are going to suffer. It's absolutely asinine. Let's change this real quick to the CPI number that came out yesterday, because I've been talking, and Bobby will verify this. I thought the inflation numbers were going to roll over. Global shipping rates coming down, lots of key commodities coming down, except for one, crude and diesel and gasoline. So when you look at the commodity picture in general, there's everything. There's lumber, there's copper, but then there's crude. Crude basically makes up about probably 20 to 30% of the whole commodity picture when you're talking about the cost of everything. It dwarfs the importance of any other commodity. That's correct, right?
Well, absolutely. You can't do anything without oil, right? You can't manufacture anything. You can't dig for metals. You can't do anything without crude. It makes the world, without energy, you can't do anything with any other commodity. You can't farm. You can't,
Right.
So, of course.
So not the fairy unicorn dust or whatever the hell that the administration is trying to get us to use. That doesn't work, is what we're saying. Because I'm shocked, and frankly, I'm offended.
I know.
Right.
Weird. I know it's weird. But we need a lot of fossil fuels if you want to get your EVs and your EV batteries and your EV metals and et cetera.
Yeah, of course. So let's talk about that then. Let's branch into about a month ago. I gave a speech at the New Orleans Investment Conference, and the whole punch of it was, and Bobby, I'm going to keep patting myself on the back for this shit too. And
I wasn't going to say it this week.
I'll take the words right out of your mouth.
Tracy's so nice. I wasn't going to actually say it. You're going to bring that shit up again?
Okay, but I'm right and getting righter. the copper market was stretched. They talk about their decarbonization of the future. There's no decarbonization that happens without copper, and we're already at copper deficits. We already have the environmentalists so badly wanting everything EV, but so badly wanting no more extraction anywhere, including around the world. You study copper markets as well, I assume. Give me your take. Walk us through what you think of copper for the next 6 months, year, 5 years.
Well, that's the problem. I mean, longer term, obviously, it's a buy. First of all, we're already in a market deficit. It's ridiculous. Even China, who
Did you just do a Trump China?
lies about it. Lies about everything.
I love how she said it disgustingly. Like it's like that China. Go on.
Well, because, I mean, first of all, there's two factors of this. First of all, China's inventories are way down, right? And they've actually admitted that, which is odd because earlier this year, they just got caught lying about their inventories. And a bunch of firms got shut down because they were over exaggerating, their inventories, and people obviously were hedged on that, et cetera, and it was a whole big thing. So now they're back to admitting their inventories are at the lowest they've been in the last 10 years. And they're looking to, they want to invest more in those metals, likely going to Africa, I'm sure, because that's what they do. And we have LME inventories down. We have COMEX inventories down. I mean, we just don't have enough. And in fact, even if every mine produced that we have now at the max capacity, we still wouldn't have enough. We need 20 more mines the size of that just to get us to 2035, which we don't have because there's the mining industry suffers the same problem that the oil industry does. Is the last 7 years there's been no capex.
Exactly.
And a lot of mining equipment, Jimmy, runs on solar and wind, just so you know. I mean, it's
all the time. That's what they do. Right. Yes.
So you can easily build electric cars by powering it with copper drilled from solar. I'm sorry, I'm beating a dead horse here.
No, but Bob, I want to ask a question, but I did want to tell, because people who view this podcast and people who see me on Twitter know that the copper thing's the drum I've been beating for a month. I've
been talking about that for a long, long time.
Yeah, and over the last couple of weeks, I have been systematically increasing my position in copper. I don't even think of this as a trade necessarily, and I haven't done it in futures yet. I think of this as more like, this is something I want to have, 5% of my dough in for the next 5 to 10 years, maybe even more of that. But Bobby, you got a question?
I do. I wonder if Tracy could explain something to people, which I don't think is, hang on, cheers, which I don't think is clear to a lot of people, is why the winter matters so much for diesel. Because the whole distillates thing, distillates right now are 17%, according to the last EIA report, 17% below the 5-year average. And I don't think people understand that distillates are made, heating oil and diesel are made at the same time for the most part. So if there's a bigger demand for heating oil, there's a bigger demand for diesel. Plus, Tracy, I worked at a boutique oil firm in Chicago for about 4 years, doing geopolitical strategy and hedging strategies for them in the energy markets. And one of the things I learned there, which I always love to bring up because it's something that Jimmy doesn't know, and I think that's amazing. That makes me really happy when I'm smarter than Jim. Is the speed crude oil goes through a pipeline. Even though we don't have pipe, you can't increase the speed even if we had more pipe. So I remember we had a barge of crude oil up near Canada, and we were trying to get rail cars, and there were no rail cars available. And I said to the CEO at the time, because I didn't know, I said, can we just commission a rail car? He goes, it's like 18 months and millions of dollars to build them. You just can't, because of the EPA regulations.
Right.
So I think people don't, you mentioned that crude oils and everything. I don't think people realize how important diesel specifically is, and the mix with heating oil.
Oh, absolutely. It runs the economy. How do you get freight to move, right? How do you get your shit from Amazon every day?
You just swore on our podcast. How dare you?
Oh my God.
Anyway,
sorry. I said I might do that. It was an accident.
Yeah, we will not fucking bleep that out, just so you know.
God damn it, Tracy. But anyway.
But I mean, really, diesel is the heartbeat of the economy. How do you get anything? It's basically moved by trucking or freight or container ships, whatever, that basically use, obviously vessels use, marine oil, but it's a derivative of, it's a
It's a
distillate.
distillate, right?
Right.
I mean, you're
So
looking at
that's
distillates down the
how
whole.
you get everything, right? How are you going to get your stuff from China moved to the US on a vessel that's using, marine fuel oil, right? Or how are you going to get that off the dock and to you, off the dock in LA and to you in New York? A truck.
I have an
Like
environmentalist. I have an environmentalist friend, and I don't use environmentalist as a dirty word. Jimmy's one, his daughter's one, but I don't use that as a dirty word. But I have an environmentalist friend who I told him, I said, you realize crude oil specifically from areas of North and Northwest and other places are being moved in trucks because the Keystone was killed. They're being moved in trucks that burn diesel down to refineries. So it's like they're burning the fuel, they're driving the derivative or the origin of that fuel down to make, because we don't have a pipeline.
I know.
It just,
Which is actually more dangerous if you think about it. Rail and trucking is actually a more dangerous way to move that kind of fuel.
clearly.
Right? How many train accidents do you see?
How many pipelines?
A lot.
Head-on collisions. Anyway,
It's amazing. And Tracy, to his point, my daughter's studying, she's getting her master's in environmental engineering at Stanford right now. She worked in the business. She was an Illinois engineer. And I argue with her all the time because I believe that if you look at the environment, the most damage ever done to the environment was clearly industrialists, number one. Following second to me is environmentalists who've done some bullshit things in the name of good over the years. And this is one of the things, like you just said, like, okay, they stopped the pipeline and they never for 1 second think about what the ramifications of those things are, unintended consequences. We all do that. But let's talk about the CPI number from yesterday. And this is going to be a question for both you guys. I thought it was a big deal. I thought we were going to see inflation rolling over. The only wild card I thought was energy, and I think it still exists. And I think the stock market, I think the whole bear thing is over. Technically, that makes sense to me too, with a new weekly high, and I assume we're settling there. We're taping this, by the way. This is actually 3:05 on Friday when I'm saying this right now. Do you think the episode of inflation is over? Do you think the supply chain is healing slowly and gently? Tracy, you first.
Oh, man. I think that inflation is still going to be sticky because I still think that we're going to have problems in the metals market, because I think looking out to 2023, remember how energy was kind of the big deal this year? I think 2023, it's going to be metals, and we're going to see prices rise because
My copper trade. Woo!
because the West is sticking with these plans, these environmental plans. We're not getting away from EVs or whatever. They don't really care what happens. Every government is kind of pushing forward this. We don't have enough metal. So I think 2023 is going to be like those base and industrial metal kind of trade, just like this year energy was. So I think inflation is going to be sticky. What I really would look at, and what I'm looking at closely, is US dollar, right? Because we've seen that pull back a lot. We saw that Thursday. We had a puke from like 110 to 107. I think a lot of people got stopped out when that broke kind of the support area. I think people got scared. And I think that, we saw a big pullback again today. And I think that's because of, people exiting out of the markets. I think FTX thing might have something to do with it. I don't really know the mechanics of how the crypto markets work, but I know that USD is involved in there somehow. So I think part of that, there's some part of liquidation there, and as well, when the FTX thing happened in general, we saw the broader market, we saw a lot of deleveraging because we saw big guys like, BlackRock and SoftBank and Ontario Pension Fund and Tiger Global, and all these big guys that were exposed to the market. When that news kind of hit earlier in the week, we saw a big dive in the markets because we saw some deleveraging. And then I think when we had that CPI release in the market, ripped 100 points. I think some people got caught off sides a little bit.
You think? Before I pass Bobby, because I want you to answer too, but I want to underscore two things that Tracy just said. She casually mentioned the fact that governments around the world don't care that they're driving up energy prices. They genuinely don't give a shit. And then she mentioned the Sam Bankman-Fried thing and BlackRock and whatever. I don't give a shit when a fool and their money part. I mean, I think there's a beauty to it. The only thing I like about rates being what I think are potentially too high is that you pull back the wallpaper and see where the holes in the wall are. You see who the morons on. And if Tom Brady lost $655 million like is being portrayed, I've enjoyed watching him play football, but I don't give a crap. A fool and his money are soon to part. If I said anything bad, Bob, or no?
No, and honestly, like one of the things about Jimmy, Tracy, I don't know if you know this, but he's very consistent. I mean, he's always, he is. He enjoys others' pain. He's been
I do
clear
not.
about
That's
that.
not true. I
He's
just
been
think
clear about that. No, look, from a perspective of inflation, one of the members, we do these daily webinars for our members at Path Trading Partners that we have. And one of our members, literally for the last 8 months, has been saying pause is guaranteed, a pivot is guaranteed with the Fed, right? He's a permabull. And, I said to him the other day, I said, it's like saying snow is guaranteed in Chicago. It's like 70 something in Chicago right now. And I'm like, the guy's like, snow is guaranteed tomorrow. Snow is guaranteed tomorrow. Keep saying it. The Fed wasn't going to raise rates, not only at 75 basis points, but at all into infinity. They were obviously at some point going to pause. What I think people don't understand, Jimmy, about inflation is it's always going up. It's an index. When you look at CPI, pull up a maximum CPI at the Fed website, St. Louis Fed website. It's this. It is straight up the whole time. There's a dip for each recession, and then it's straight up. And there's a difference between disinflation and deflation. Disinflation is what we saw in the last set of numbers, right? A reduction of the increase in prices at rate. What we don't actually want to see is deflation, because that then it's just like, I'm doing one of those things, Tracy, Jim says I always do. But, if we have deflation, it's similar to like when we all saw big screen TVs at $12,000 each. They'll come down. Then they came down to 8,000. We're like, they might come down a little more, and you don't spend. That's deflation. So people actually pull back during deflation and they don't spend. It's a horrible economic condition. My issue is this. We had commodities, including crude oil, drop, right? In this past CPI number, you know what actually increased? Services. Services went from 3.8 last month to 3.9 this month. What is one of the stickiest part of inflation? Services. So what happens if crude oil starts creeping up, which it's been doing? What happens if your copper trade is right earlier than you think and it starts going up? It now joins with services inflation, and we see that those inflation numbers come right back up. My issue is, does the Fed see year over year inflation at 4.5% as a victory? Do we see it as a victory?
Before I pass that to Tracy, I will add that the rents are going to plummet. I will add that supposedly 49% of restaurants are late on rent payments right now, 35% of small businesses in general. I do think there's two sides of this equation. Tracy, take us home with that.
Oh, no, I absolutely agree with you. And that's what I meant about kind of sticky inflation, where we're going to see stagflation, even though everybody hates the word stagflation, but we're going to see inflation higher in certain areas. It's just a fact. As we see with higher rates, as we see demand destruction in other areas, such as housing and rents, etc. Right? The anomaly that services is that we still have pent up demand, which is crazy.
Yeah.
From COVID lockdowns. I mean, there's literally, looking out into the H1 of 2023. I mean, cruise lines are booked. People are still traveling. Airline. I mean, it's nuts. Even though
people have money, want to spend it.
Can I add something to that, Jim, please? So what Tracy just said. So stagflation, and Jimmy and I, I've been talking about this, and you've agreed with me, by the way. I don't think any Fed governor wants to go down as the Fed governor that lost in the fight to inflation. And stagflation is a worse economic condition than inflation or recession. if we get to a point of stagflation, which your comment, Jimmy, struck me about the small businesses being late on their rent. Do rents plummet, they catch up, or do rents plummet because they close? I think it's probably a little bit of both, but I think that number is going to go down in part because businesses will close, and now we're in stagflation. And how do you get out of that? So I think we've had 10 years of zero interest rates, right? Why do people think we can't have 5-6 years, 6%, 5%?
Because I don't think so. Because I believe, Tracy, I have a restaurant too, by the way, Brant's Palatine, and so I'm plugged into the restaurant business too. I fully believe that our economy completely collapses if rents are too high for too long. And things have changed over the last 20, 25, 30 years, is that overregulation, almost punitive taxation, had to be accompanied by inorganically low rates, or else the house of cards falls in. There's nobody who's lined up to decrease regulation and open up lines of trade like Reagan was. I think that rates have to come back down. Tracy, thoughts?
Well, I think that eventually rates will have to come back down. What I think is more important is that I think the Fed is going to have to move their 2% goal really to start to accept 4%.
That might be the
sounds
sort of, I think that's the middle ground that Jim and I don't have right now, because they can't get to 2%, not unless they leave rates.
I might not be disagreeing with you. That's a work in progress in my head. That might be big too.
Yeah,
The thing that always strikes me about the inflation argument too is that the psychology of it, like people are like, inflation's not going away. And what they really mean is those high prices aren't going away.
Yep.
And like you said before, those prices aren't going to come back down, nor should we necessarily want them to come back down. Maybe some of the froth being knocked out a little bit too. Tracy, towards like this show, we break up. You're on for sure. The macro guest is on. We talk, and then we break into trades using CME products. I want you to stay on, particularly if you're going to call one of us an idiot when we give our trades out, because we like that kind of talk. Will you stay with us, or you can go too if you want?
I'll stay on for the trade portion. Let's do it.
Good. Bobby, can I go for it with my trade portion?
Please. I'm only going to recap a trade, so you go ahead.
Can I get my chart back up first?
Get your drink in the picture.
By the way, my two trades from last week one was the long gold, one was the short 10-year yield contracts. Both of them are working beautifully. These trades are going to be similar right now. My theme is not changing. We never talked about silver in this, and I think silver is an interesting trade right now. I'm looking, and again, I'm not going to be putting this on the futures, and everybody who follows me knows why. I'm uncomfortably long silver in some other trades. But a trade back down to 21.20 when I was mapping this out a couple hours ago, I think it rallied hard into the close, so this might not even ever happen. But a pullback to 21.20, so spot to buy the micro December silver contract, CME, with a target of 22.80 on the upside, and a stop placed below 20.25. This is and placed at 20.25. This is the stop level. Like at first, I thought 20 was the level. 21 to me seemed the level that when it took it out, a settle above it seemed very bullish technically to me. This trade, if you take it up to the target, make $1,600 on the micro for one contract. If you take it down and get stopped out, it's $950. Which, by the way, the micro silver contract is still kind of big. It's only 1/5 of the main contract. It's 1,000 ounces. Thoughts on it, Tracy? Silver.
On silver, okay. I actually got long SLV calls December 16th at 22 last month.
So good.
I kind of like
what's the duration? When do the calls expire?
December.
Oh, okay. Oh, the December calls. You said that. Okay, I forgot my month.
December calls.
Yeah. Okay, right. I thought you got long in December. I was like, was that
SLV 22 expiry is December.
Okay, so that means you.
So I did get that. So I was already kind of, because when we're talking about silver, is that not only is it a precious metal, but it also has industrial applications. So if we're looking at solar panels and windmills and things like that, there's a lot of those metals in that. So it's kind of one of those cross metals, even though it's been beaten up forever. But I think it will gain more and more importance as we're looking to expand solar capacity, et cetera, because new solar new solar panels actually require twice the amount of silver that solar panels did just 10 years ago. So
Wow. See, I'm so glad you're on the show. Thank you for this, brother. And Bobby, before you comment too, I want you to throw in the fact that, because I do want the opinion of both of you, the fact that crypto's been absolutely caned, absolutely pummeled, is that going to put a shot in the arm of precious metals as well, Robert?
I say yes. First of all, I think we saw that. We actually saw on the risk asset sell-off a couple of days ago that gold held in better than anything when crypto was absolutely getting crushed on the first news of the FTX problem. And now we've got Tether kind of breaking. If you know anything about crypto, and I've been saying for a while, both here and on my TV appearances, that I need Tether to clear out before I get any crypto exposure again. And I need to see how that plays out and clears out, and Tether seems to be breaking. But anyway, when we had sort of that fear in the market on the crypto situation, gold was actually positive during that risk asset sell-off for the longest period of time of any of the assets on that day. I love your silver trade. I love it because we have two consecutive closes now above the 200, two consecutive daily closes above the 200, and today pulled back below the 200. And even though it closed lower than silver's open, it still closed above that 200. Now the 200 is very flat right now, but it's still the 200. You know, it's one of those things. It's like when Walter Payton was really old, he was still Walter Payton. You know, you still had to be careful. So that's how I feel about the 200-day moving average. So I like this trade a lot. I don't think you got it. Your entry was 21.20.
It was 21.20. I'm not going to get it out.
21.35 is the lowest. I mean, we're closed basically. So
yeah, whatever. I still got a lot of silver.
Pullback, Jimmy, your setup of a pullback is perfect for where you put it. I like the trade a lot.
Bobby, but before we go into my next trade, you want to go into your crude recap?
Yeah. So
by the way, I will add something real quick. I'm sitting here and there's some guy walking around on my roof, and now I've just decided I think he's cleaning my gutters, but I really should know what the hell's going around this house because I was freaked out for a second there. So
anybody that knows you know you're like 5 feet around you, and your wife handles the rest. Everybody knows.
The rest. One time I posted a picture of my back lawn, and someone was like, "Wow, what a great yard you have! How do you keep it looking so good?" I'm like, I don't know how do lawns work? Like, who cuts grass and stuff? I don't know how that works. So, but anyway, Bobby.
Yeah. So 2 weeks ago, I wasn't on the podcast last week, and I don't have a fresh trade for this week only because I've been dealing with some personal issues that I told you guys earlier. But I bought crude oil. I bought the crude oil futures contract, and I bought it at about 85.70. Okay. My stop was at 80.54. This is micro crude. Again, I would not have done this trade had I not been able to do it in micro crude, because in full crude, it would have been too much risk, right? It would have been $5,700 or so approximately of risk per contract, which is just, it's out of what I allot to crude. But having said that, my stop's at 80.54. We didn't get anywhere near there. Lowest level we got on the pullback was like 84.70. And now we're moving back my way. But my target is 96.44. Now, first the trade itself, Tracy and Jim, and then my sort of overall thesis. My overall thesis is actually $65 before 105. Now, this will probably be the last week that I say that, because it's just, to me, the dynamic has been changing. I said that about a month ago. I stuck with it because
I didn't put a floor under it at 70. So
yeah, I know that, but he's so, I almost said he's so dumb. I would have meant it. He's so,
I'm so glad you did.
What do I want to say? What I'm trying to say is, like, his floor won't work. Anyway, I was actually encouraged for my original thesis by a lot of the comments on the OPEC Plus members this week. Some of the conversations they're having with their Asian clients, prices are too high, blah, blah, blah. They might add more production. I don't think that'll happen. But my current trade is for a 96.44 target before an $80.50 some odd cents stop. If we get into the if we get into the low 90s, I'll move that stop up. What do you guys think? I'm still in it. So
I like it, Tracy.
I like it. I have September 2023 $100 calls.
$100 calls or $2,300 calls?
No, 23. Yes.
She bought 20 of the $300. They can't be that expensive.
We're dead and we're never driving again.
It can't be that expensive.
No.
So September, so you got like 4 or 5 months.
2023, you 23.
Yeah.
$100.
Good.
You guys,
Good.
seriously.
I agree with Tracy. Well, actually, Bobby, you now too. But when were saying 65, I don't know. It seemed to me that there was just too much lined up against it. So I like the trade a lot. But again, I'm liking every trade right now that favors weaker dollar, a Fed that might be backing off a little bit. That's going to be my next trade as well. But I'm not going to get to see it. And by the way, for those of you guys who watch the show, a lot of times I play upside in the stock market with those imbalanced call flies, like a 70 tick wide call versus a 40 tick wide call. And I love those trades, and I think I'm smarter than everybody. And I hate the fact that they don't perform well when we just absolutely shoot higher like we have the last 2 days. And I'm making money, then losing money. I'm like, wait, I'm no genius. This is idiotic. And then I have to rebalance it. And that's happened to me on several of these trades the last couple of days. Now, that being said, I'm a bull of the stock market now. I said a weekly close above 38.25, and then a follow through on a weekly. We've gotten it this week. I'm a bull. I think the bear market is over. Like a lot of people are like, oh, you're making this big, huge call. No, I don't bet the whole farm on it. You guys are, we're risk mitigation people. We're not Sam Bankman, whatever the hell his name is. We don't put everything in one pocket. So I think the bear market is over. I think at a pullback to 39.40, which at the time I was writing this out, I thought it was going to get. It also doesn't seem like it's going to happen if the market continued rallying as we started this show, which looked like it was going to. Pull back to 39.40 was a spot to buy it with a target of 41.10 and then a stop out place back below 38.40. So I guess we're just talking theoreticals here about the direction of the short term because it's not, the actual trade's not going to happen. Tracy, do you like upside in the stocks?
I like upside again. I'm at 41.06. I think you could possibly see before we see meaningful pullback in this market.
That's your level. That's your level that you have.
My level is 41.06 to watch. If we
there was a moment I was terrified.
If we start moving above, if we
okay.
start moving above that, I get scared.
Okay.
Then
I thought you meant that was last trade for a second. I haven't been watching my computer for 45 minutes. Like, what'd you say? 41.06. That's where we're at right now. No, we're not. Okay,
no,
good.
That's the level I'm watching.
Perfect.
If we get higher, we could shit the bed tomorrow.
Of course. Yeah.
Right.
Well,
but that's, I think that's that's like the 200-day. If we start moving above that, then we break that sort of, wedge, that downtrend wedge, technically speaking.
Robert?
So I like to trade in the short term. I said at the end of September, I thought the fourth quarter was going to be positive. So bold of a call considering how weak the third quarter was, right? Just brave. But I agree with Tracy that I think we might, I'm a little nicer than her, and we might poo-poo the bed. My thing is this. I think that, so obviously Jimmy's talking about a short-term trade, because if he thinks the bull market is over, he wouldn't be targeting only a few points from here, right? He'd be targeting new all-time highs. But I think that the fourth quarter is going to continue to have strength because I think people think they understand what the Fed is going to do and they've accepted it. And so that's theory, it's from a momentum perspective priced in. And we've gotten our first reasonably weak inflation indicator. Even though all the Fed speakers are saying this is not a pause, they'll likely slow the rate of rate increases, right? I believe this is the long road to I like this trade, Jim. So I'll just stop. I think the first quarter of next year and the second quarter of next year are going to be really, really hard for the stock market. Because now we're shifting from what's the Fed going to do to rates to how the hell are we getting out of this recession? That's what we're going to be shifting to next year. Now, stock markets do rally during recessions, but they don't rally during stagflation. That's the kicker. So if we can't get inflation under control, not good for equities.
Tracy, last word on the markets?
Yeah, no, I also think that you have to look at the last quarter of the year. All these portfolio managers haven't made money all year, right? They're coming up like November, what is it, 16th or the 21st? Forget the date where they figure out whether they have clients or not left. And so I think that, they're doing whatever they can to help push up the market. That's all I'm saying.
Got it. Okay, so it's Friday. What city do you live in now, Tracy?
I am in Fort Lauderdale.
Are you really, you lucky bastard? What is a Friday night for like? Is there a favorite bar you go to? What are you gonna do?
Yeah, I'm gonna go to my beach bar and like kind of just chill. Watch
Sounds
the ocean. I mean, the mini hurricane is over. So it's nice
fantastic.
and sunny today. So
Jimmy, is
What
that,
will you?
is,
What?
is that little beach with the duck boats in Arlington Heights near 355 open for you or not?
That Lake Arlington?
The little
Right?
Lake Arlington duck boat beach,
Yeah,
is that
no,
open
yeah,
for
right.
you?
By the way,
Chicago
we
is
could.
great too, though. Come on.
Yeah, well, I was gonna say we can bash Chicago all we want. There's some fabulous beaches. They're just not fabulous now. And by the way, it was 75 yesterday, but it's gonna be like 35 today. So
Oak Street Beach. You can go to the
it's
beach.
great.
Fantastic.
Okay. What's last question? What are you gonna drink? You walk up to the bar tonight. What's your first drink?
Wine. I'll have
I don't like wine.
Can't
Can't lose. Something
Can I
cold, something
recommend
cold
the
and white.
butchery out of Moldova? Putin hasn't invaded here yet, so get this money.
Was that from the convenience store in the hotel or no?
Actually, we had this at the house. We buy all the half bottles of wine we can, so that when we drink 7 of these, we'll be like, it was only a half bottle. We
It's
don't
only
really
half bottles. Yeah.
We're good.
All right, I'm leaving. I'm going to take a nap and then I'm going to go to my bar because I just got a text that we're down employees tonight. So I'll
That's
be hosting.
weird. That never
Yeah,
happens
we're down
to
employees.
restaurants.
Thank you guys. This was so much fun.
Thank you, Tracy.
Tracy, thank you so much.
Thanks for putting up with us. Appreciate it very much. Have a great night, you guys.
Thanks.
Cheers.